Okay, so today we're going to talk about something a little bit different. We're going to talk about when is the right time to actually sell and to realize the gains in the growth that you've actually experienced in a stock that you might have actually dollar cost averaged in on, right? And this is super hard for so many people to actually do. You know, they look at their P&L or they look at their portfolio and it's like, oh, well, I'm up by X percentage, right? But that X percentage that you're up by is actually not realized gains, right? It's unrealized gains. And those unrealized gains could actually slip away really, really quickly, right? So the question then becomes is, how do you know when to actually sell the shares that actually has appreciated and then basically realize the gains that you've actually created? That's exactly what today's video is about. And I know that it's something that so many people actually struggles with, right? It's so much easier when people say, oh, just buy this and it's going to go to the moon. But it's a very different story when somebody says, oh, you know what, the stock's about to come down. Yes, you've got a ton of unrealized gains in this specific stock, but maybe now is the right time to sell. And you may have found yourself in this situation recently. I know that we have, because the market has made something like 23 new all-time highs this year alone. So I'm going to give you some of my thoughts on, dollar cost averaging and when to actually take those unrealized gains, bank it as cash so that you do actually have cash on hand when the market does reverse or does a pullback. And then you can basically go in and dollar cost average on that same equity again, right? As long as you've actually banked the unrealized gains that is currently sitting within your portfolio. So with that, let's get into it. Okay, so one of the first equities that I actually want to talk about today is AbbVie. We did a dividend deep dive video on AbbVie a while back, and we were looking at this consolidation zone. I'm just going to draw it on the screen for you here. And I also want to point out a couple of other things on why we actually, went in and dollar cost average on AbbVie at the time. Now, you'll also notice that there was an earnings call that actually happened roughly on the 27th, 28th of April. That was when the stock actually capitulated, right? And it capitulated in a couple of different ways. One, it had broken out of the consolidation box downwards, right? But then you saw quite a lot of volume actually come in here. They had a really good earnings call from a fundamental perspective, and the stock basically traced back into the consolidation box. And then we basically dollar cost average again as the stock actually moved out of this consolidation box. I think it was right about here. Now, AbbVie has had a massive run up recently, and this run up that you've actually seen over the past 2-3 days has been some fundamental news that has come out, some partnerships, some mergers, and this is exactly why AbbVie is where it currently is, right? Now, there's a couple of other things that I actually want to bring to your attention here, specifically with AbbVie, and just some analysis that we do from a technical perspective. There is a couple of different things that's actually happening here. Number one, there's a sector rotation that's happening at the moment, sector rotation into the healthcare sector, moving out of the technology sector, essentially. And you can see that with your sector rotations. But there's something else that's also happening in about 2 weeks' time, and that is dividend payments that's happening for AbbVie. And what we normally find with these dividend payments or dividend payment dates is that there's generally a pullback on the shares, right? Because somebody that might have invested in the company takes their dividend payment and they then liquidate their asset, right? And they take the money and again put it into another dividend paying stock whose ex-div date might be coming up in 2 or 3 weeks' time, so that they can kind of repeat the cycle of getting paid the dividend payment for investing in those specific companies. So that's just one of the other pieces that we are actually watching. And for us at this point, it actually makes sense to take some profits off the table, right? And then wait for a slight pullback in AbbVie so that we can come back in and then dollar cost average into AbbVie again. The kind of level that we are watching is this green line that you've seen that I've drawn across here. This has been previous highs that has actually happened. If the stock were to pull back, you'd probably be looking at coming back to roughly the 430 mark and then bouncing back off, right? So that's kind of what we're looking at for AbbVie. So let's move along to the next ticker that we're actually wanting to take a look at. And that ticker is going to be American Express. Now, again, there's a couple of technical indicators here that's actually put this on my radar. The first one being quite a lot of selling volume that's actually come in over the past 2 days. And you can see that it's actually tried to make a higher high, but pulled back extensively here. The other piece that's actually also interesting for me, specifically when we're looking at American Express, let me just clear that off, is again, there's also earnings coming in, right? So go and take a look at some of the previous earnings dates and see how the stock has either pulled back or rallied off the news, right? One of the other pieces that I'm also looking at here specifically for American Express is kind of a double top that's actually happened here, right? So it's basically tried to move up but couldn't, right? Sellers came in, pushed the stock back down, tried it the second time, and they got hammered here on Thursday as well, right? Thursday, and then this is Friday. One of the other pieces that's also interesting for me here is that there's a consolidation happening right at the 337 mark. Now, that's great, right? It could be bull flag consolidation. But because I know that the financial sector is actually pulling back at the moment, and that American Express is part of that financial sector, I'm watching this 337 area really, really closely. And if we actually break the 337 or 335 level here, which is kind of exactly where the green line is, this green line is a 200-day SMA, simple moving average, you can expect further downside, right? Because there is extremely thin structure on the move up as it broke out of this consolidation box right over here, right? So if American Express did break this 335, 336 level, I'm expecting it to basically come back and test the 20 somewhere around there. Okay, so that's American Express out of the way. Let's move on to one. I think I've got one more that I actually want to share with you. That's kind of come up on my radar today as I was actually just looking at the stocks in the Dow. And that one is going to be, let me just get it up quickly. I think it is Cisco. Okay, so yes, it is Cisco. Now let's take a look at Cisco as well, and you'll see some similarities with regards to the patterns that I've kind of pointed out to you, right? And those patterns are high volume, right, coming in, right? Selling pressure coming in on the volume bars. You also have dividend payment that's going to be coming up. You've had a huge run up from this consolidation that Cisco's actually had. Right, this run up has been pretty immense, right? Right from this point all the way up, this rally all the way up. There's a massive gap here as well that hasn't been closed yet. Now, the thing that actually concerns me, and you can see that I've actually got my my marker here or my alert, is that we've kind of looked at this consolidation range, but fallen straight out of it, right? And let me just draw that in so that I can illustrate it a little bit better. There's a consolidation zone right here, right? You see it? Okay, so Cisco has basically broken that consolidation zone right here. Now the question is, where do we go from here, right? Is the 113 level actually going to act as support, as well as the 15-day moving average, which is this orange line that's actually coming up here? Or do we break this line and flush further downwards to meet the 100 SMA right over here? So that's kind of my concern here is, do we see something that looks like this over the next few days, right? And that's not too far-fetched given the fact that there has been some concerns with the AI rally and how it's actually stalling and where it's actually going, right? Okay, so those are the three tickets that I actually have for you today. It's AbbVie, and then it's American Express, and it's Cisco as well. And it's basically based on some fundamental analysis, right? Some news that's actually coming out within the market, just where the rotation is actually happening from a sector perspective, and then repairing that with some technical analysis and saying, hey, here's a possibility for this to happen. Now, again, none of this is guaranteed. I'm not a financial advisor. I can't see the future. Nobody can, right? If anybody ever says to you that they know exactly what the stock is going to do and what the market's going to do, please don't believe them. They're talking through their butthole. So all we can do is to actually look at the probabilities and take the action that puts us in the best position for either a uptick in the actual equity or to basically book the profits that we actually already have in them, right? And at this point, I'm looking at, maybe taking some profits off the table and saying, okay, I'm going to realize this unrealized gains that I actually have, and I'm going to put some dry powder in my pocket, and I'm going to wait for a pullback so that I can come back in and dollar cost average on either the same stock or on some other stock that's actually showing some potential for a better dollar cost average opportunity. So if you like this type of content, then please like and subscribe it and share it with somebody that you think might actually be interested in it. We do this type of content every single week. We also publish these videos in our Wealth Circle community at the date that is actually created. And then we will go live with these videos probably a week or 2 weeks later in YouTube. So if you are watching this in YouTube, then this data is probably 2 weeks old. If you do want the timely data, then come and join us at the Wealth Circle. It's a completely free group. We share quite a lot of tips and tricks and information from an investment and from a financial perspective. So with that, I will see you in our next dividend deep dive.